Welcome to the Riskwiser Zone, where we dive into the world of stocks and finance with a dash of wit and a whole lot of insight. I'm your host, Lewis, and we're excited to have you along for the ride. Today, we're going to talk about the latest developments in the tech industry, specifically in Hong Kong, where the city's bourse operator, HKEX, has just launched its first equity index tracking Hong Kong-listed technology companies. This new benchmark, called the HKEX Tech 100 Index, is a significant move, as it underscores the city's shift from a market long dominated by property and finance towards innovation-driven growth. Now, you might be wondering what this means for investors. Well, the new index tracks 100 large-cap and mid-cap companies spanning artificial intelligence, biotech and pharmaceuticals, electric vehicles and smart driving, information technology, internet, and robotics. That's a pretty comprehensive group of leading technology companies listed in Hong Kong, reflecting the vibrancy and innovation of the city's tech sector. But here's the interesting part. Qualified mainland investors can buy and sell these Hong Kong-listed stocks through Stock Connect, which links trading in Hong Kong with Shanghai and Shenzhen. And to make it even more accessible, HKEX has entered a licensing agreement with eFund Management to issue an exchange-traded fund in the mainland Chinese market based on the HKEX Tech 100 Index. This move is expected to increase mainland investors' interest in Hong Kong stocks, facilitate their investment in the local market, and support the medium to long-term development of Hong Kong's capital market. And with the planned ETF aiming to provide investors with an efficient way to tap into the growth opportunities of Hong Kong-listed tech companies, it's clear that this is a significant development for the city's tech sector. But, as we always say on the Riskwiser Zone, it's not all smooth sailing. The transformation towards technology comes amid a wave of property stock delistings, with more than 30 Chinese property firms exiting Hong Kong and mainland exchanges since 2022. So, while this new index is certainly a positive move for the city's tech sector, we need to keep an eye on the broader market trends. And, speaking of market trends, we also have some exciting news from the world of crypto. Hashkey Group, Hong Kong's largest licensed crypto exchange, is aiming to raise up to $215 million in its initial public offering in the city. That's a significant move for the crypto industry, and we'll be keeping a close eye on how this plays out. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're continuing our discussion on the latest market trends and analysis. Today, we're looking at the Indian stock market, where the Nifty has been experiencing some turbulence. According to Dharmesh Shah from ICICI Direct, the current weakness is part of a broader structural trend rather than the start of a major reversal. He believes that the Nifty is likely to stabilize within a well-defined zone and expects it to find strong support between 25,500 to 25,700. Shah also noted that nearly 3/4 of Nifty 50 constituents continue to maintain a positive structure on the weekly charts, which suggests that the index is likely to consolidate within 26,300 to 25,700 over the next couple of weeks. On the banking front, he maintained a constructive stance, believing that 58,000 to 57,900 remains a strong support for the Bank Nifty, with a potential target of around 59,500 to 59,800. In terms of specific stock ideas, Shah prefers stability over high beta names and recommends large-cap stocks, particularly those in the capital goods sector, which has corrected sharply in recent months. He highlights L&T as a top pick, citing its technical resilience and potential for renewed interest ahead of the upcoming budget. It's worth noting that market analysts are divided on their outlook, with some predicting further corrections while others see this as a buying opportunity. As always, it's essential to do your own research and consider multiple perspectives before making any investment decisions. We'll continue to monitor the situation and provide updates as more information becomes available. For now, it seems that the Indian stock market is experiencing a healthy correction within a bull phase, but only time will tell how this plays out. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a closer look at a fascinating story that's been making waves in the financial world. Cathie Wood, the renowned CEO of ARK Invest, has been sharing her insights on the current market landscape, and her views on Bitcoin and gold are particularly noteworthy. According to Wood, the ratio of gold to the money supply is as high as it's ever been, except for the Great Depression. She believes that many gold buyers are still positioned for a delayed inflation wave from the COVID-era liquidity surge, but history shows that gold can fall hard once inflation fears fade. In fact, she draws parallels with the early 1980s, when gold collapsed after peaking, and suggests that we may be moving into a similar environment, which she describes as Reaganomics on steroids. Wood expects Bitcoin to outperform gold in the long term, citing improved liquidity and shifting concerns from inflation to deflation and productivity shocks. While Bitcoin has underperformed gold over the past year, the long-term chart tells a different story, with Bitcoin outperforming gold by 11.8% over the past 5 years. It's also worth noting that Wood is predicting an 80–90% chance of a Federal Reserve interest rate cut on December 10, which could have significant implications for the market. Additionally, she mentions that pro-crypto Kevin Hassett is currently the top probability to become the next Fed chair, which could be a positive development for the crypto space. As always, it's essential to approach these predictions with a critical eye and consider multiple perspectives. While Wood's insights are certainly thought-provoking, it's crucial to remember that the market is inherently unpredictable, and past performance is not necessarily indicative of future results. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.